Welcome to Yahoo Finance Live. I'm Shauna Smith along with Dave Briggs. Let's get you up to speed on this afternoon's market action because all three of the major averages are trading to the downside here after two Fed officials warn of more rate hikes ahead. We also got last month's producer price index that posted its biggest jump that we've seen since June. So we're seeing some pressure here across the three major averages with the Dow up 138 points, looking at the Nasdaq off just about 0.5%, S&P off about 0.4% here. So some pressure on the markets as investors digest and try to figure out what exactly the Fed is going to do next. Taking a look at the bond market action, yields pushing to the upside just a bit with the 10-year yield up about 3 basis points. Taking a look at the sector action this afternoon, certainly a lot of red, as you can see on your screen. Real estate off just about 0.2%, so I guess not the worst performer here, as the best of the underperformers, you can say, in the market today. Materials also not far behind there in terms of the biggest laggards. You have technology and consumer discretionary. Taking a look inside the Dow, a bit of a mixed picture there. Apple barely holding on to gains, up just about 0.5%, but Cisco, we brought you those results after the bell yesterday. Certainly the outperformer inside the Dow today, and we're looking at gains of just about 6%, Dave.
Cleanest dirty shirt. We like that one.
Yeah, we do like that one. Another one.
Nicest home in a bad neighborhood.
Okay, there we go.
You like that one?
I like that one. We got to use that one.
I think the cleanest dirty shirt is
that
more
one always
relatable.
Confuses me. Whenever I try to say it out loud, I always get it mixed up.
See,
that was my
often
confusion.
employ that strategy when getting dressed. So.
There you go. It's always on top of
That was a
mind.
little gross. Thank you, Shauna. Cleveland Fed President Loretta Mester driving that price action today, Shauna, after saying in a speech, quote, "We have more work to do." The Fed president noting she would have favored raising interest rates by 50 basis points earlier this month, rather than the Fed's decided 25-point basis hike. The St. Louis Fed president also backing the need for more rate hikes. A combination of these comments weighing on markets, as you saw there. So where do we go from here? Let's ask Amy Kong, Barrett Asset Management Chief Investment Officer. Amy always knows where we're going from here. Is a 50-point hike on the table?
Hey guys, thanks for having me. It's never off the table, but at this point, we think the probability of a 50 basis point hike is lower for a couple of reasons. The Fed has just announced a 25 basis point hike last month, and I think there needs to be a consideration of the consistency of the rate hikes going forward. The messaging is very important. And then second, I think it's still a little too soon to be calling for a 50 basis point hike. Yes, the CPI numbers this week were worse than expected. It does show that CPI is still moderating, but not to the degree that we're looking for. And we still have one more CPI data point until the next FOMC meeting. I think if we get further information that CPI is not moderating, or perhaps it goes higher, then to your question, maybe a 50 basis point hike would be a better possibility at that point. But for now, I'm still agreeing with the market in terms of a 25 basis point hike in March.
So, Amy, what does this mean then for equities? Because the market so far, they have been ignoring any rhetoric that we've been getting out from the Fed for the most part, also ignoring the action that we're seeing in the bond market. The gains that we've seen since the start of the year, do you think that momentum can continue if, in fact, inflation does remain pretty sticky, which it seems like it's going to?
Yeah, it's a great question because I think the markets have just gotten a little bit ahead of itself. You can see that with the way the markets have been traded since the start of the year. Tech, growthier type names have started to come back. That momentum can continue as we're looking still through the earnings season. It's been less bad than expected. I think that could be a driver of that momentum. But as I've mentioned, the CPI numbers, PCE coming later next week, et cetera, FOMC meeting minutes, all of that can remind investors that inflation is not dead. And when you have start to see that kind of momentum, negative momentum come back into the market, again, what we can expect is just volatility coming back into the system going into the next FOMC meeting, which again is not for another 6 weeks.
It was welcome news that Goldman lowered its likelihood of a recession to 25%, which the brilliant Brian Sozzi phrased as 75% we don't have a recession. I appreciated that. You say that the probability has further increased. Why?
It's increased based on some of the leading economic indicators that we're keeping a very tight monitoring over. That includes sentiment, that includes new CapEx orders, money supply, things of that sort, are all suggesting that the collective data points have peaked sometime first half of last year. And history tells us that it typically gives us maybe 12 months, 15 months of lead time before the economy starts to going into a downturn. The data is conflicting, though, because you've got some softening corners of the market, including housing and manufacturing, but the jobs market continues to be very tight. We saw that with the jobs numbers. Retail sales were also surprisingly strong this past month. And so the data continues to be conflicting, and that kind of holds off the start, if you would, of the recession. But we still believe, though, that again, some of these economic indicators, the leading ones, are suggestive that we could enter a downturn perhaps back half of this year.
Maybe the jobs report, especially last month, clearly painting a picture of a very resilient jobs market right now. But we have been hearing about, it seems like every day at this point, more and more companies that are announcing layoffs. Are we starting to see some cracks in that picture? And what do you think the hiring landscape then looks like as you look out to the remainder of the year?
Sure. There's been more headlines, as you can imagine, from the tech sectors. Tech companies, rather, they've overhired during the pandemic and they're reversing course. So there's one argument there. But really under the hood, to your point, there probably are a lot of companies not making headlines, still slowly but surely right-sizing their employee base. And that does take some time to enter into the market numbers. What's been interesting is that the number of temp layoffs has been rising since July of last year, and that doesn't get talked about a lot. History, again, tells us that generally speaking, when CEOs and CIOs start to get nervous, the temps go first. And so it probably will take another quarter or two for us to really see some of these layoffs get into the numbers. But we are starting to see cracks in the system. Wage inflation is starting to come down a little bit. And so again, to us, this is likely the peak of the tightness, if you would. And we do expect that to moderate going into the back half of this year.
And if there's been a broad takeaway, a lesson we've seen throughout earnings, is it that you lower estimates enough you can leap over it, or what are you seeing?
The EPS has started to come down. EPS estimates have started to come down, but probably not fast enough. Looking at the estimates at the beginning of the earnings season versus now, estimates have come down maybe about 5%. We do expect that to continue. Keep in mind that the back half of the earnings season are mostly the retailers. And so that's going to be an important indicator of how strong, how healthy the consumer continues to be. And that's, again, very critical when it comes to the U.S. economy, given that it's majority consumption based. What's interesting, too, is the stock market tends to be more forward looking than that. And if you look back over the last 10 decades, if you would, the stock market actually starts to rise about 6 months before trough earnings estimates. So while earnings estimates can continue to move lower, the markets can be looking beyond that. So that's something to keep in mind as we think about stock price movements.
Very important to keep in mind. All right, Amy Kong, thanks so much. Well, let's get you up to speed on Bitcoin, because take a look at that. Price is moving even higher again today, up another 6%, touching the highest level that we've seen in months. Jared Blickery is at the big board over there with a closer look at this movement. And Jared, it's hard to wrap your head around it because the moves here, it's not really connected to reality, it doesn't seem.
Well, has it ever been?
Detached, really, given the...
It's
very
like
detached.
We're talking about memes
from the SEC, right?
Well, yes. So that, I guess you could consider that a fundamental, and it does count. But what I've been saying for months now is Bitcoin has been leading the way. It's been leading risk markets higher and lower based off of important inflation reports and also what the Federal Reserve is doing. Over the last 24 hours, it's up 6%. Over the last 3 days, up 14%. Now, let me show you what the S&P 500 has been doing in the meantime. And I'm going to come full circle on this. Let me put some candlesticks. And here we have, this is a 6-month chart. So over the last few weeks, the S&P 500 has basically been going sideways with the other major indices. And this is as rates have been going up. And they're responding to some of these reports, sometimes in an odd fashion. But the last time we had a consolidation period like this, that was in the back half of December, another period where rates were going higher. So let me show you what's happening with the 5-year and also with the 10-year. Here's the 10-year. In that late December period, rates were going up and then they came down. This facilitated stocks going up. guess who was leading the way? Bitcoin. In early February, we have rates going up, and guess what? Stocks going sideways, but Bitcoin is not. So let me just show you Bitcoin once again, and I have a chart from our site that I prepared. You can get this on our website, yahoofinance.com. Key indicator here, volume profile. This shows you the volume that has been transacted at every price. This goes back several years, and here's this huge top we have, but here's where we are right now. And you're going to notice a vacuum, a little volume vacuum, all the way up to 30,000. So we could see prices rise and fill that volume vacuum all the way up to 30,000, but that's where the rubber meets the road. So impressive that Bitcoin has done this so far, may be leading equities higher. We'll have to see if this continues, guys.
All right, Dr. J, thank you, sir. Appreciate that breakdown. All right, let's get you up to speed now on recent price hikes. You feel them. Paramount combating its rising costs by hiking the price for Paramount Plus. The ad-free level, which will now include Showtime, is going from $9.99 to $11.99 per month, while the ad-supported tier without Showtime is going from $4.99 to $5.99. Also facing higher cost is Nestle. The company raised prices by 8.2% last year, but this didn't fully offset the impact of increased ingredients costs on its margins. The company's CEO, Mark Schneider, saying on a call with reporters, quote, "Like all the consumers around the world, we've been hit by inflation, and now we're trying to repair the damage that has been done." And when it comes to Nestle, don't sit there and just think about chocolate. Think about Nescafe. Think about Purina, quite frankly. And they saw sales volume down 2.6% in the fourth quarter, Sean.
Yeah, certainly it's interesting here just to take a look at the fact that some of these companies certainly diverging past when it comes to the consumer, whether or not they're going to continue passing along those price hikes. Coca-Cola and Kraft Heinz are two more of those companies that raised prices in 2022. Coca-Cola raised its prices by about 11% last year. The company saying that it's going to continue to raise prices this year. The rival Pepsi, on the other hand, is pausing price hikes. Kraft Heinz, which raised its prices by more than 15% last year, saying that they will not raise prices any further, at least for now. The company actually seeing a drop in sales by volume here. That drop was about 5% in its fiscal fourth quarter because of the price hikes as well as supply constraints. So yes, their numbers on an overall basis, some of them are impressive, but those volume numbers, we've seen them dip at a number of companies, Kraft Heinz being the latest one. And I think consumers are paying closer attention to those price tags. It will be interesting to see whether or not Coca-Cola, since they said they will continue raising prices, if they will see more of a backlash here over the coming quarters because of that.
The Fed would like to see some positive story in all of this. They don't yet see it right now. We're talking, generally speaking, in these companies around a 2 to 3% decrease in volume or demand. And so, yes, the question is going forward, is this the only way they can keep those margins high? And the other question is, are they rising these costs beyond their cost increases? Or is this, as some call it, Shauna, greedflation, which has really come into play a lot, think with the price of eggs, which are up 70% year over year. And there is a question for the consumer. Are they rising these prices because their supplies, their costs are going up, or just simply because we will pay it? And these are the questions the Fed needs answered.
Yeah, exactly. And I think we're also getting a clearer picture on who has pricing power and who doesn't this quarter, just strictly by the numbers, strictly by the volume. So taking a look at Coca-Cola's latest earnings report, they clearly do have the pricing power. A number of analysts pointing to the fact that Coca-Cola is able to raise prices more than some of its peers, just given the strength of their brand. So we'll see whether or not that does hit sales here in the coming quarters. Right. Well, we are just getting started here on Yahoo Finance Live. Coming up, mortgage rates jumping higher. Is there any sign of relief for buyers? We will speak with National Association of Home Builders CEO Jerry Howard coming up. Then Twitter turns over a new leaf, allowing cannabis ads in states where it's legal. We will speak to Trulieve CEO Kim Rivers on becoming the first cannabis operator to launch cannabis campaigns on the social media platform. And with earnings season in full swing, we will dive deeper into DoorDash's latest financial results. They will be out after the bell. We'll bring you those numbers as soon as they're released. Don't go anywhere.
Welcome back to Yahoo Finance Live. Some big news out of YouTube today. CEO Susan Wojcicki announcing she's stepping down after 9 years in the position and nearly a quarter century at parent company Google. Yahoo Finance tech editor Dan Halley knows how to say that name better than I do and explain the magnitude of all this. A long time and at a crucial period she appears to be leaving.
Yeah, Wojcicki stepping down here. She's obviously has led YouTube for 9 years. She was a CEO. She's been at Google for 25 years. She was one of their first employees. In fact, the big deal about her is she rented her garage space to Sergey Brin and Larry Page, and that's kind of how they got Google off the ground. So it's a really, interesting story. She's been around this for quite some time, and she has taken YouTube to become one of the biggest websites on the internet. I mean, they're dealing with a lot of competition, but they still bring in billions of dollars in revenue. I don't have the number on me right now, but I believe the last amount that they had brought in for the prior quarter was somewhere around $8 billion in ad revenue. And so it's a massively important property to them, but it's also important because it helps ensure that they have a constant flow of users, right? New users come in, they check out YouTube. My nephew's looking at kids opening toys on YouTube, and that's how he gets in there. Give me that job. Let me open up toys. How is that a job? Anyway, so obviously it's super important for the company itself, and her leaving at this point in time, as Dave, you were alluding to, is a big deal. I mean, this is a massive property for them, one of the largest sites on the internet.
The head of the NFL announced officially appearing on YouTube as well.
Yeah, certainly a very, very important time for the company. Without Wojcicki there, what does YouTube look like? How do you think that's going to kind of shape and change maybe the direction of this company then going forward?
Yeah, look, they're dealing with competition from, so she's been there obviously for the 9 years. She was part of the ad team prior to that, but she has dealt with incoming competition from Facebook, right? Facebook going into video, from Instagram going into video, from TikTok. Now they're dealing with that, and they launched their shorts, obviously, a few years back. That's to deal with the short form video aspect of things. So they really are kind of dealing with this at the same time as ad revenue is falling, right? Not as a result of anything the business itself is necessarily doing wrong, but just because that's what we're seeing. Digital ad sales are down. You can look at Meta and Facebook. You can look at Snap. They're all dealing with these kinds of problems. So I think at this point in time, where does YouTube go from here? Well, they are expanding. Obviously, YouTube TV has become a big deal. They have the NFL Sunday Ticket deal that they had signed, and so I think that's where they continue to move forward. This is something that's going to be a bigger part of the story for them.
I have YouTube TV. If you have any connections there, would you just tell them to fix the guide on the app?
Dude, it's awful.
It's awful. The worst thing
I have it too.
On all of television apps.
Why do I sign on and it immediately shows me library?
It's atrocious.
I don't get it.
Inexplicable.
I don't like it.
Sorry. They're staying in-house, though. They're not going outside for a replacement. Chief Product Officer Neil Mohan will become the next head of YouTube. What do we know?
Yeah, so he's been there for quite a while as well. He came over with the DoubleClick deal. So when they previously purchased DoubleClick, Google had done that. He came over then, and he's been with YouTube for quite some time now. And he was actually part of getting YouTube off the ground, getting shorts going. So he knows this product. So it's not as though, they have an outsider coming in who doesn't necessarily understand the product, doesn't necessarily understand where YouTube is going or what it needs to do. I think he really will help guide it in a similar direction, right? They've worked together for quite some time. Again, it's not as though YouTube is a broken product or anything along those lines. It's still one of the biggest websites out there. But I do think that they can wring more out as they go into the live TV aspect and the on-demand services aspect of it.
Yeah, well poised to become the new cable TV, really, if they fix that.
Yes.
That app guide.
Fix the guide. God.
If any aspiring billionaires want to live in my garage, I'll put you in the basement.
Yeah.
I won't put you in the garage. I'm just saying.
I got a
Anyone
basement.
wants to start the next Google.
Yeah.
Good
I
deal
got
for
room.
you.
Dan Halley, thank you. Appreciate that. Coming up, National Association of Home Builders CEO Jerry Howard tells us what we can expect from the housing market this year. Stay with us.
Let's talk about the state of the housing market. Recent reports have certainly painted a mixed picture. So today, mortgage rates ticked up for the second week in a row, which of course could slow buyer demand. Meanwhile, homebuilder sentiment surging last month, the index posting its largest jump in about a decade. Builders aren't the only ones that are feeling optimistic right now. Shark Tank star Barbara Corcoran, she's also the founder of the Corcoran Group, joined us on the show yesterday and weighed in on whether or not the worst for the industry is behind us. Let's take a listen.
I think the worst is behind us because the housing market is showing signs of life for the first time in the last year. Everybody believes, whether it's true or not, that the Fed is done lifting rates. And with that, it's ushered a few more buyers into the marketplace.
So let's try to get to the bottom of this, where exactly we are right now in the housing market. For that, we want to bring in Jerry Howard, National Association of Home Builders CEO. Jerry, it's great to see you here on the show again. So weigh in, is the worst of the housing market behind us? Are we starting to see, as Barbara put it, signs of life there?
I guess we're the best of the underperformers, right? I think that we are starting to see an uptick in builder confidence. You mentioned that. But it's still below 50. The builder confidence is getting better. It's not all the way there. We're cautiously optimistic that the worst is behind us. But when the Fed talks about raising interest rates again, with the problems we have in the supply chain, I don't think we're going to see a gigantic growth in the market, at least not in this year. But I do think the worst is behind us, particularly if they keep interest rates below the 7% mark.
I'm looking at, speaking of home builders, the home builder stocks, and D.R. Horton's up 7, and Lennar's up 10, and KB Home's up 12, Toll Brothers up 16. This is all percent this year. What does that tell you about their true sentiment? And you talk to these home builders. What are they telling you about the environment?
I just got back from our annual convention. There were over 100,000 builders there. And I've got to tell you that everyone is feeling optimistic, much more optimistic than I thought they would be when I got out there. And the general overall sentiment is that we're going to be off to a sluggish start at the beginning of the year, which is, I think, borne out by the statistics that came out yesterday on housing starts. But that by the end of the year, we'd be back into some pretty decent production. And that next year, barring any unforeseen circumstances, we should have a pretty solid year.
Jerry, in order for the housing market really to push higher, like you're saying, maybe we won't see that till the start of next year. What needs to happen in terms of mortgage rates? How low do they need to fall? And has that at all changed since we last spoke?
Well, we do think that we've seen the peak. We think that they're going to bounce around a little bit. Obviously, we'd like to see them get as low as possible. The lower the cost of capital, not only for the housing consumer, but for the builder as well, who has to borrow money at the front end of the pipeline. Obviously, that's better for everybody in the game. So we'd like to see them lower. We'd like to see the supply chain fixed. It's getting better. Anecdotally, I can tell you the biggest problems out there now are with appliances and electric transmitters. But the supply chain is still a mess. And of course, we still have some labor issues. So there are policy decisions that can be made that can really make sure that by 24, we come out of that box really, really full steam ahead.
What policy changes, Jerry?
Well, I'd like to see our immigration policies fixed so that we can have some legal immigrants coming into the country the history of this country basically is it's built on the backs of immigrant labor. And right now it's very difficult to employ immigrants and feel confident about it. So I'd like to see the labor supply fixed. I'd like to see a lumber agreement negotiated with Canada. It's been years, and we depend on Canada for roughly 30% of all of our lumber. So that's an issue. And then, of course, the other supply chain issues are out there. So capital, labor, and the supply chain are things that can be corrected relatively easily if they want to.
Jerry, when it comes to the labor issue there, I know you're saying some changes in policy when it comes to immigration that would improve that picture. But how bad is it today? Has it improved at all?
Well, right now in the residential sector alone, there are over 400,000 vacant jobs available. So, and on an annualized basis, the construction sector, including residential and commercial, we have to hire almost 750,000 people a year just to keep even. So the labor problem has been around since before the Great Recession. It's been exacerbated over time, and it's something that really needs to be addressed. through immigration and through a change in our own thinking domestically about American kids getting into the construction trades.
Good stuff. Jerry Howard, appreciate that. Good to see you, sir.
Good to be with you guys. Thanks.
All right, coming up, more layoffs are coming at DocuSign. We'll tell you why the company is cutting another 10% of its workforce on the other side of the break.
It's time for our triple play. Three stocks that we're watching in the final half hour of trading. We have DocuSign, Crocs, and Meta. Kicking off with DocuSign. Now the company is reducing its workforce for the second time in 6 months. This time it's laying off about 10% of its workers. The e-signature company joining a number of others within its own industry that are cutting costs amid worry about a slowing growth and also a weakening economy. Now DocuSign scaled quickly during the pandemic as their stock took off, and just how quickly they nearly doubled their workforce to 7,500 during the pandemic. Shares today, they're just around $66 a share after finishing 2020 around $222 a share. So certainly well below that high there that we saw for DocuSign. And Josh, it's just something that we have been talking about time and time again. These tech companies faced with these tough decisions. We have certainly seen the first wave of layoffs from a number of these companies that are very recognizable. But DocuSign saying that, hey, that first layoff was not enough. We need to cut costs now and might need to continue cutting costs down the line.
We were just talking about this, I think it was on Monday, it was Twilio, right? Mm-hmm. Also having their second round of layoffs. And I think that's the interesting part here is you're seeing not just one round of layoffs, but a second round of layoffs. And we said on Monday, and it's really the same comment again today, how many second round of layoffs are we going to see is kind of going to be where the story goes next, I think, here, as far as some of the companies in the tech sector. But my play today is Crocs. Shares are in the green, hitting a new 52-week high after the company's fourth quarter earnings release beat Wall Street estimates. The company also expects to earn in the range of $11 to $11.31 per share in 2023. That coming in above the street estimate of $10.86. CEO Andrew Rees saying, "Hey Dude" is exceeding expectations a year after Crocs purchased the brand. The brand nearly cleared $1 billion in revenue last year. And Crocs is expecting the brand to grow at a mid 20% rate for revenue, Dave. So again, Hey Dude, kind of in some ways the story of the earnings release. Again, you said you were like, hey dude. I keep seeing it all over the earnings release, but it really was everywhere. And it's sort of that big growth arm now for Crocs. It's been exciting to see. I love the video behind us. I love the shoes. I need to get a pair. I've worn my friends. I think they're exciting and they're pretty cheap.
Friend's shoes?
They're pretty cheap. I've tried them on.
Not like all day. He just tried them on.
We're talking about if we have them yet, and I said I don't have them yet.
It's interesting that promo, which obviously aims at a skater type. My assumption was that it's not generally speaking that tailored, but yes, I want to try them as well. And you mentioned the earnings release, and I'm a giant loser. We all acknowledge that. I actually counted the references from the CEO to Hey Dude in the earnings call, and he mentioned Hey Dude 13 times. He only mentioned Crocs 18 times. So that tells you just a little bit about where they are on their priorities. But what gives you a better sense of it is the CEO also said it gives them an addressable market of 160 billion versus 40 billion prior to the acquisition. Let me say that again. A total addressable market of 160 billion. Prior to buying Hey Dude, it was 40 billion. That is a massive game-changing acquisition for Crocs. My play is Meta. Mark Zuckerberg today rolling out the broadcast chat feature on Instagram. Zuck saying, quote, channel supports text, images, polls, reactions, and will soon support appearances, AMAs, and more. If you don't get that, like me, hopefully this video helps.
You guys, extra tickets just dropped. Get on it now.
It's poll time, everyone. What pose should I break down next?
All right, you got it? Meta will also bring the feature to Messenger and Facebook in the coming months. Shares down today as we all figure out what exactly it is and how it will impact the platform. Down 2.5%, but up 40% to start this year. I am once again Tom Hanks in the movie Big. I don't get it. So we've got a young guy here. No offense, Shauna. This is what? This is for influencers, right? This is not for me and Shauna. This is for strictly those who want to.
So you're not an influencer, Dave?
By no way, shape, or form.
Not yet.
If you were, and you were, say, a TikTok influencer, is sort of what I think of right away here.
And Shauna's right. Yeah, I'm going to be huge.
Once you're a TikTok influencer, maybe at 8 p.m. every night you're going to log on and do an Ask Me Anything, right? You sit there and you respond to the replies. I think this is sort of Instagram's version of that, and trying to meet people where they're at, but also you don't have to be live on video the whole time, is what I think is the
There is the big
advantageous
difference
part of
between
this.
Instagram Live. That's the question I needed answered, Shauna.
Yeah, and I think it makes sense, and certainly for Instagram, they're doing everything they can to compete with TikTok. Clearly, they're losing some competition there. This boosts creators' engagement. We know a lot of creators are favoring TikTok over Instagram. Given that engagement, they find that much more on TikTok. So it makes a lot of sense. Clearly, we're not seeing a reaction, too much excitement in the stock price today, but I think if it does turn and it is able to boost that engagement, which is so critical here for Meta going forward, for Instagram specifically, it could potentially change things.
Well, and I think the other thing too is you think about why this would make a creator want to use Instagram over, say, TikTok, right? And it would really be for the brands because they think that they can make more money for those brands. And I think you can maybe engage with people at a different level here that might be more advantageous to the brand by being able to put in a poll, to respond about the product, and be able to type back and forth but take a break is a lot different than what we see right now in the live atmosphere. Really, I do think it depends on if the brands prefer this, right? Because we're talking about influencers. They do what the brands tell them to do.
Right.
So do the brands want people to move over to this kind of platform versus TikTok? Only time will tell on that.
And that's the real question, is the ad revenue and what the brands say. I do get it now in terms of the performance aspect to it. It's not there. It's more like a podcast or radio versus having to sit there and constantly perform on an Instagram Live.
Or a message board, kind of hosting a message board in some ways.
Twitter Spaces like.
Right.
But I also think it doesn't really enable the creator to have that feedback from their audience, which is what they want in order to grow that engagement, which would be so critical for brands. I don't know. I think it's a home run.
We're going to do one. We're going to have to do one here soon, okay?
All right, we will. Okay.
All right.
Well, you just need to become an influencer, so we're waiting for you here.
All right. It's coming, man.
Well, coming up here, the Biden administration is revving up its strategy for EV expansion in the U.S., and Secretary of Transportation Pete Buttigieg had a lot to say about it earlier on Yahoo Finance. We'll bring that to you right after the break.
Secretary of Transportation Pete Buttigieg spoke with Yahoo Finance this morning about the Biden administration's plans to expand Americans' access to electric vehicles and how partnering with manufacturers like Tesla may help them get there. Let's hear what Mr. Buttigieg had to say.
We want to make sure that a charging experience is as interchangeable and predictable as filling up a car. That's one of the reasons why we set up these standards, saying, for example, that there has to be transparency about the prices, that it can't be a walled garden that requires you to be a member of a certain vendor just in order to be able to use these things. You got to be able to use these chargers easily, interchangeably, and transparently. And as we continue to work building them out, the other exciting thing is the job creation. High standards here about these things being assembled in America, having American-made components, because we know the good-paying jobs that are associated not just with making these electric vehicles, but making the devices that are going to keep them charged.
And you mentioned that it should be as easy to get your vehicle charged as it is to fill up gas right now. And I wonder just sort of the nitty-gritty here. Are, for example, gasoline stations going to be converting or adding chargers? Is that part of the plan? What can people expect in terms of where they'll be able to find them, the timeline for rolling them out, et cetera?
So I think we're going to see a lot of both and for the foreseeable future, but you do see some companies, BP is a good example, that are showing a lot of interest in integrating chargers into their network. But you're also going to see chargers in places where a gas station never could have gone. I mean, in some way, I certainly continue to say it should be as easy as filling up a car, but in some ways it's got more in common with charging your phone than does putting gas in a car, because many Americans will be able to charge at home and at work. That changes the logic of where the chargers need to go. But one thing that doesn't change is you never want to go more than 50 miles without knowing that there's going to be a charger available, which is why that's just one of the standards that we are holding the states to as we send that funding out their way and ask them to use it to create a statewide and ultimately interlocking nationwide network of chargers that wherever you go, when you're headed out on a road trip, you know that you're going to have multiple opportunities to charge up when you need it.
So with Tesla just sounds like it's the first of more partnerships that could be on the way?
Yeah, I think this is a great opportunity. Look, Tesla has already built a very impressive nationwide charging network, and it turns out that it is relatively straightforward to connect this up in a way that other cars can use. I don't mean to say it's easy. We're going to require work and retrofits, and it's really just about the connector versus the fundamental technology involved. They have a customized connector they call NACS. Most cars that you would buy if they're not Tesla use a standard called CCS, the combined charging system. And we want to make sure that again, same as you have to check whether a gas station has a nozzle that's going to fit your car. If there's gas, you can go there and you can use it. We're trying to create that same kind of simplicity. So really applaud Tesla for taking this step of being prepared to create these kind of connectors to bring a goal of 7,500 of their new and existing charging points up to the standard that would make them interchangeable and usable, both for those Tesla vehicles and for any other vehicle that would pull up and want to use. And when you do that, then qualifies for federal funds, because of course we want to make sure those taxpayer dollars are going to something that can be used by anybody, no matter what car you drive or what not requiring you to be loyal to one company or another.
That is the Secretary of Transportation, Pete Buttigieg, this morning. Interesting comments, certainly some lofty goals, a bold move by Tesla. But look, we are vastly undersourced. We are nowhere close to what he's talking about, an electric charging station every 50 miles. This is a conversation that should have happened 10 years ago based on the goals that the Biden administration has laid out, which is 50% of all vehicles sold EVs by 2030, a goal we cannot come close to meeting because in particular, we don't have anywhere near the charging stations. We don't have the power grid. Just look at what happened in California most recently. There were roving blackouts because they don't have the grid, and they asked people not to charge their cars at certain times of the day. On top of that, if you need me to lay out more challenges for you, how do these gas stations figure out a way to find profitable charging stations to replace what they have in terms of their existing infrastructure? Look, it is completely unattainable, the goals the administration has laid out as presently constituted.
Yeah, I do agree with that 50% of vehicles sold to be EVs by 2030. I do think that's very lofty. I don't think that's attainable. I do think, though, that this is a step in the right direction.
Agreed.
Yes, we are very far from where we should be, where we need to be at this point, given some of those goals of the administration and what they want to see in terms of EV adoption. I don't think it's going to be as quick as they hope it's going to be. I don't think, frankly, that the appetite there, that the demand is there from Americans. A lot of that, though, a lot of the hesitation has to do with the fact that the infrastructure is so far from where it needs to be today and where it needs to be in 5 or 10 years from now. Every 50 miles for a charger, that still, though, is not cutting it. People are not going to be satisfied with the fact that it would be every 50 miles. You need even more than that, which would just be incredible at that point.
And keep in mind, one last note, California and New York set to phase out gas-powered cars by 2035. So we are light years behind in terms of obtaining these goals. All right, we're going to really discuss more of this on the battery aspect next. Coming up, shares of Piedmont Lithium seeing a boost thanks in part to EV rules in the Inflation Reduction Act. The company's CEO tells us how their newest deal will help bolster the U.S. battery supply chain when we come back.
Piedmont Lithium shares, look at that, up just around 1.5% today after inking an investment deal with LG Chem. Now, the deal was spurred by the Inflation Reduction Act, which has stipulations about where products and EV batteries come from. That has certainly been a boon to companies like Piedmont Lithium, whose shares are up huge year to date and up huge, really, over the past year. We want to bring in Keith Phillips, Piedmont Lithium's CEO. Year to date, you're looking at gains of just about 68%. Keith, it's great to have you here. Certainly a huge deal for your company. Talk about the significance of this and where we are just in terms of the adoption of energy that we need in order to meet some of the goals laid out from the Biden administration.
Well, listen, thanks for having me. We're very excited. LG Chem, as you may know, they're the biggest battery producer outside of China. They're making massive investments in the U.S. in battery capacity and cathode capacity. So to have them become one of our biggest shareholders, invest in our business and partner with us as our biggest customer for the time being is really exciting. They're great. The project we're a partner of in Quebec is called North American Lithium. The spodumene concentrate we produce there, goes into lithium hydroxide that goes into batteries. And having LG as a customer is fantastic. It'll be the first new producer of battery raw materials in North America in decades. So it's great news for us.
Good to see you, sir. So we're about a year removed from some really bold comments from RJ Scaringe, the CEO of Rivian, when he said in terms of the existing supply chain for the EV batteries, we're going to need 90 to 95% of the supply chain does not exist. Are we much closer to meeting those goals?
Not really. I mean, we're making progress. It's interesting. I heard your prior conversation about charging infrastructure and everything else. The biggest issue facing the EV business is not demand, it's not charging, it's not EV production, it's battery production and the raw materials that go into the batteries. It takes a couple of years to build a car plant. It takes a couple of years to build a battery plant. It generally takes a decade or more to advance a lithium project, to get a mine permitted, funded, engineered, and built and ramped up. It takes a long time. So I think I think you'll see demand for electric vehicles will outstrip supply for decades to come. The supply will be held back because people won't be able to get the lithium and other battery materials they need for the cars.
Wow. So Keith, then how long, I guess, until the U.S. battery supply chain is self-sufficient in the U.S. from your projection? Sounds like we could be decades away from that.
Yeah, maybe not decades. And I think it's a global issue. It's not just a U.S. issue. I mean, right now, 80% of the lithium raw material comes from Australia and Chile. A lot of that material, particularly the Australian material, goes to China to be processed. There are a lot of projects in the U.S. and in Canada, in Africa, and South America, really all over the place to bring material online. They'll generally take time. We're lucky. This project in Quebec is a brownfield project. It was built about a decade ago. It's operated off and on in the past. It'll come online pretty quickly here in the next several weeks. The next one in line is probably a couple of years behind, and then there are several kind of slotted to come, but those will just be playing catch up to demand. I mean, right now we think we're going to need about 40 times more lithium hydroxide in the US by the second half of this decade than we produce today, 40 times more.
Wow.
So a lot of that will have to come internationally. Some of it certainly can come from friendly countries like Canada, like Ghana, where we have a project, and like Australia. So it'll be a battle. I think if you look out to the 2040s, I think you're going to have a lot of discoveries and lithium projects advance. I think lithium will be a market like copper, growing nicely with a good opportunity for people to invest. Between now and then, I think you're going to see supply shortages, elevated prices, and for those that can get into production, an opportunity to really generate cash flow for shareholders.
Really interesting conversation. Piedmont Lithium CEO Keith Phillips. Appreciate you being with us, sir. Thanks.
Thanks for having me, guys. Thank you.
All right, you got it. Coming up, we're counting down to the closing bell on Wall Street. Stay with us here on Yahoo Finance Live. All right, just a couple of minutes away from the closing bell, so let's check in with Yahoo Finance's Jared Blickery to break down today's market action. What are we seeing?
Well, within the last hour, we've seen a sell-off intensify. Here's the Nasdaq, and we were sitting around here at the beginning of the hour, and then we got some comments from Bullard. He's one of the Fed members, and he's basically reiterating some things he said before. He agrees with Mester, looking for 50 basis points, or was looking for 50 basis points at the last meeting. Did not get, or I believe we did not get that. Anyway, some hawkish commentary there, finally being reflected in the index prices. Now, I want to focus on some earnings, and maybe we'll have time to circle back to Bitcoin. But here are the earnings from today. Cisco announced after the bell yesterday. Let me just show you a 3-year chart here. Some very bullish technical action, finally clearing this major hurdle of $50 right here. If this holds over another day, I'd say into Friday close, looking for a nice breakout from this level. Now, if you look at a max chart, still have not even come close to eclipsing those .com highs. Just a little perspective right there. But nevertheless, we're going to dial this back down and take a look at another name. Now, this is Shopify, down 15%. Here's a 1-year chart, and you can see basically building a base here over about a year, finally broke to the upside. But you take a look at the 3-year chart, a lot of these pandemic names look very similar to this, and there we go. You can see still camping out in the very bottom of this huge trading range right here. I think we got time for one more here. Let's go to Roku. This is another stock that has barely come off of those lows, but you take a look at the year to date, going to be pretty impressive in terms of percentage. Now, this level up here, whatever that high is, rejected fairly strongly. Roku, I think investors like the guidance, but again, another pandemic stock that has a long way to get back up to break even. Now, I did promise a look, or a potential promise, looking at Bitcoin here. Bitcoin did sell off a bit more than equities, leading the way down this time. Here's that high from earlier today. So 25,000, that was a potential sticking point. I said if it gets above 25,000, going to head to 30,000. So far, that has not happened. If this is in fact a stumbling block, guess what? Bitcoin could be leading equities lower into OPEX tomorrow. Here's the bell.
All right, well, that does it for today's trading day. All 3 of the major averages ending in the red. We saw a leg lower here in the final hour trading, following some comments from Fed officials here just in terms of what we could expect to see going forward from Fed policy. You're looking at the Dow off 431 points, S&P closing off nearly 1.5%. Look at that, the Nasdaq falling nearly 2% on the day. Let's take a look at some of the top movers, some of the biggest stories of the day, starting with Roku. Shares of that, we just heard from Jared, pretty much higher today. A big jump to the upside, soaring about 11%. The move higher coming after the company reported better than expected fourth quarter results, noting in a shareholder letter that a, quote, muted ad space during the fourth quarter is improving so far this year, with ad spend from restaurants and travel leading the way. With today's jump, you're looking at a 5-day gain in the stock of just about 28%, Dave, and the highest level that we have seen for shares since at least September there. So the commentary, the view around the ad space, which we know is so critical for Roku, seems to be changing at this time.
Yeah, their shareholder letter you see there. Reading, despite tightening advertising budgets in Q4, ad spend on the Roku platform outperformed the overall ad and traditional TV markets in the U.S. You talk a lot about the struggling traditional television markets. Well, it is just continuing to hurt. Although Roku, not a great performance, but I guess another one of those you talk about lowered the bar and able to leap over it. But remember, this is a $473 stock back in July of 21. $473 stock. They do have a couple of good news coming down the road. They've got those Roku branded televisions coming out in the spring, which will be a big generator for them, they hope. And the other one, of course, is their partnership with DoorDash. We're going to break those DoorDash earnings here pretty soon, but they have a interesting new partnership with Dash coming online that should help the numbers in Q1. And then their biggest competitor, did you watch the Super Bowl? Obviously you did. You remember that ad that fooled everybody, right?
It did. It fooled me, and I got yelled at for it. Are you sitting on the remote?
Tubi, their biggest competitor, Fox's version of fooled everybody. So they are coming on their heels, although Roku has now reached, they believe, 100 million Americans. Also want to take a look at one of the companies whose streaming services is available on Roku. Shares of Paramount trading down on the day after the company missed Wall Street estimates earnings per share. The CEO, Bob Bakish, telling investors in a letter to shareholders, quote, "Our content and platform strategy is working, and even with more exceptional content coming this year, we expect to return the company to earnings growth in 2024. Content is very, very expensive, and it is just a loser for a lot of the streamers at this point."
Yeah, it certainly is a loser. I think the street's very concerned just about what those numbers are going to look like. Streaming profitability, clearly a huge question mark here for Paramount as we look ahead to what those numbers, what those losses could potentially be this year. It's a very, very tough balance, right? They're looking to expand their streaming services, also licensing its content. We talk about the fact that this whole landscape, media landscape, certainly has changed, will continue to change. Streaming, obviously, the future there, and up against some tough competition. Talk about Disney, their numbers recently, Netflix, certainly no shortage of streamers out there. So they are up against that competition. That's why content spend and content that they are putting out on these platforms is so critical in this type of environment. Subscriber numbers, one of the highlights of the quarter, was actually pretty good. They do remain on track to hit some of their goals over the next year or two. But it's all about the losses, all about what they're spending right now, and that is what the street is certainly focused on.
56 million subscribers, I think, where they came in subscription growth, up 48%, a pretty solid number. How sticky is that content? They have succeeded with Tulsa King, they have succeeded with 1923, and a few others. But the amazing thing is when you just step back and you remember the biggest hit Paramount has brought to the table, and probably the biggest hit in all of television is, of course, Yellowstone, not on Paramount Plus. You can see old seasons on Peacock, and that, in retrospect, this is just in retrospect, has to be one of the biggest losses they'll ever deal with, the fact that they never found a way to have that as a feature on Paramount Plus, because the rumors are this could be it for Costner and crew as Matthew McConaughey and company.
And we know you are the #1 fan of that show. I'm still trying to get into it.
It's my ringtone, man.
Is it really your ringtone?
It's my ringtone.
You're a diehard there. But yes, certainly that, in hindsight, was a huge missed opportunity there for this company. It's going to be interesting, though, to see some of their legacy business, their fundamentals that have been deteriorating for their TV business. Ads slipping during the quarter, 7%. Affiliate fees also falling there, so some challenges ahead for Paramount.
Yellowstone's good. Shrinking on Apple TV.
I started watching that one.
Even better.
I started.
It's even better.
You hyped it up.
Early, but I'm just saying. All right. Fed members are speaking today on inflation and their outlook for monetary policy. Jen Schomburger with us with the very latest. Hi there, Jen. What are we hearing?
Hey there, Dave. Yeah, some hawkish comments out of the Fed today. 2 Fed officials said that they favored a 50 basis point rate hike at the last policy meeting and still see at least 2 more rate hikes this year to try to bring down inflation. St. Louis Fed President James Bullard told reporters Thursday afternoon that he advocated for a 50 basis point move last meeting, arguing to get to a restrictive level as quickly as possible. When asked whether a 50 basis point move is on the table for March, Bullard said, quote, "I wouldn't rule anything out." Meanwhile, Cleveland Fed President Loretta Mester said in a speech Thursday morning in Sarasota, Florida, that she also saw a compelling economic case for a 50 basis point increase last meeting, which would have brought the top of the target range to 5%. Recall back on February 1st, the Fed raised rates by another 1/4 percentage point, bringing it to a range of 4.5 to 4 3/4, where rates currently stand. Mester said, generally speaking, she doesn't like to surprise markets and takes that into account when setting policy. She says, quote, "We're better if we explain it. In that meeting, there was an economic case for a 50 basis point increase in my view, but the market wasn't expecting that. That does factor into my views about the proper thing to do at a meeting." Now, Mester says she welcomes the cooling in inflation data seen so far, but that inflation is still too high and that it has not changed her view that rates still need to rise above 5% and be held there for some time. Now, Bullard, for his part, says he thinks 2023 is going to be the year for disinflation. He welcomes the backup in yields on Treasury seen over the past week, but still says he sees rates rising to a level of 5 3/8%, which makes him one of the most hawkish members on the Fed. Dave?
Jen, speaking of things increasing, the price of eggs is out of control, up 70% year over year. You cover all things in your backyard of the nation's capital, and Senator Warren has questions here. What does she want to know?
She sure does, Dave. Senator Elizabeth Warren, along with Representative Katie Porter, have sent letters to the nation's top egg producers inquiring whether they've essentially used the avian bird flu as an excuse to raise prices and, in their words, pad profits. The lawmakers note that in the midst of these record high egg prices, Cal-Maine, the largest egg producer in this country, saw a 65% increase in profit, but no cases of the avian flu. The lawmakers write in letters to these companies, quote, although many top egg producers are private companies that have not publicly announced either their profits or disclosed the financial impact of the avian flu on their flocks, past anti-competitive practices in the egg industry raise concerns about price gouging on their part. Will be interesting to see how this unfolds. Dave?
In particular with Katie Porter. Close your eyes and just see the video that she's going to come out with eggs. It might be on YouTube or TikTok. She is a master of props. Jen Schomburger, thank you so much. Appreciate there. All right, Snap shares closing on the day. Let's see, down almost 5% after its Investor Day. Yahoo Finance senior tech reporter Ali Garfinkel here with her takeaways from Investor Day. What did we hear?
Hi, Dave. So this Investor Day was pretty important for them. It was only their second ever, and the task was really to restore credibility, is what analysts were saying. And it looks like from those numbers that we're seeing down today, maybe that hasn't happened, but I think it's worth walking through those takeaways from today because I think over time is the case they're making. So first, user growth. Those numbers are really, really important. Today they announced they have reached 750 million monthly active users. That's a 25% bump from about 10 months ago. So that's good news for them. They were thrilled to announce it and announced it at the top of the show. Second, the big thing that they were really clear about is AR is our future. AR, for the uninitiated, is augmented reality. Snapchat filters, you know, like the cat ears.
The dog.
The dog.
I love the dog.
The dog. And basically, their idea is AR ads today, AR leadership tomorrow. And the case that they're essentially trying to make is that AR is transformative in the way AI is, in the way Google search was. I personally haven't seen that yet, but it is something that they firmly believe and that CEO Evan Spiegel was particularly adamant about. He talked about AR as something that you use to teach your kid to throw a football, for example. He really does believe it, and he's staying the course on it. And the last thing, and this is what really stuck out in my mind, declining revenue numbers. They have plans to fix this, but I wanted to tell you that before I read you some numbers here, Dave. Okay, so year over year revenue growth, okay? Q2 2021, up 116%. Q2 2022, up 13%. Q4 2022, just now, 0%. Those numbers really stick out in my head, and yes, they have a plan to fix this, right? They're saying ads, monetization, future in AR, Snapchat Plus, their subscription service is where this is all headed. And granted, a lot of things have happened in the time that this has transpired. For instance, Apple privacy policies. However, those numbers are pretty sticky in my head. The zero, yes, zero year over year revenue growth. I checked it a couple of different times. I wasn't sure I was right.
I still don't see the new product, the new revenue generator, the intuitive, bold shakeup that they're coming out with on Investor Day. Or did I miss it?
No, you didn't miss it.
AR is what they've been doing forever.
And AR is still what they are doing. They said they're staying the course here, Dave.
Boy, okay. I don't know if that's going to excite the investors at that day, but Ali
if the stock is showing.
If the stock is any indication, not so impressed today. Ali, thank you. All right, got some breaking news now from Shauna.
We do here, Dave. It looks like consumers continuing to spend on their takeout. We're looking at shares of DoorDash here, moving to the upside, a big jump on this release. A couple of big headlines here in this report. Let's go through them. The company sees profit growth as people do keep ordering. First quarter adjusted EBITDA set to exceed analyst forecasts forecast. There are lots of excitement on the street in this report. Revenue coming in at $1.82 billion. The estimate was for $1.77 billion. Fourth quarter orders, also better than expected, $467 million. The estimate out there was for $435 million. The company also reauthorizing a stock buyback plan. That, of course, being one of the drivers here in after hours trading. A couple of new appointments here. The company naming a new president and chief operating officer, Prabir Adarkar. He will be replacing Chris Payne. The company also naming a new CFO, Ravi Anaconda. That will, of course, take effect March 1st, as well as a new president and COO. So again, first glance at these numbers, an impressive report. The guidance here, really one of the driving factors in this shares after hours move, up just about 12% in extended trading. Coming up, we will have more on DoorDash earnings in just a bit. And Tesla recalling just about more than 360,000 vehicles. Find out why next. And the hype surrounding a foldable device from Apple is getting a little louder. See why when we come back.
All right, some bad news for Tesla. From Tesla, the car maker recalling more than 360,000 cars for some problems with the vehicle's self-driving software. To discuss is senior autos reporter Pras Subramanian. What are we hearing, my friend?
Yeah, this is a big recall, man. 360,000 cars here for the full FSD beta issues. Specifically, they're talking about how the cars could drive through intersections when they're in a turn-only lane, or blow through stop sign controlled intersections. Also, sometimes the system won't note the speed limits that are posted on the highways, and also won't react to users going above the speed limit on the system, so it won't actually correct that. So NHTSA said this could lead to a crash, so Tesla is required to do a recall here. Now, we say recall, it's an OTA software update that'll happen across these cars over time. But this is a big issue, right? This is software is a big profit driver for Tesla from a margin point of view. We had the Barclays note yesterday talking about how this is a big part of the business and they're very bullish on that. So this is sort of a black eye for them, and we knew this was going to happen at some point, given the fact that NHTSA and both DOJ they're investigating them over some of these issues. So not surprising here, but this is a big, big recall.
It kind of speaks to that Super Bowl ad that we heard from the tech billionaire who's trying to draw a lot of attention to the issues of the self-driving.
Yeah, certainly. And you can see it reflected in the stock today with shares closing off nearly 6%. Well, speaking of Tesla, a bit of good news here for Musk, his EV maker overtaking BMW as a top luxury car brand in the U.S. Certainly a significant shift and really shows the popularity of Tesla at this point.
Yeah, not just EVs, but overall top luxury brand. They were looking at Experian data of registrations last year. The reason why we got to use registration data is because Tesla doesn't break out their sales by region. So we're seeing there Tesla 484,000 registrations versus BMW 327,000. So pretty big disparity there. It's kind of a big, it is a big deal for Tesla to do this. Other automakers sell a fraction of their cars are EVs, whereas Tesla's all EVs. So interesting there. But don't feel too bad for BMW. The Consumer Reports just named them the top brand overall in terms of autos, so there's that for them.
Yeah, you mentioned that. Consumer Reports releasing its top 10 car picks for 23, and most of them either electric vehicles or hybrids. What are some of the highlights of this report, Pras?
We have these top 10 cars here, and we've noted a couple here by price range. And I think these four are kind of ones that I think are notable for a number of reasons. Right, it's a cross section of what America is buying. That first one there is that Corolla hybrid, $25,000. 48 MPG, comes with the tech safety suite. This is what America wants. They want cheap, affordable. They want good feature set. The Ford Maverick, again, a compact pickup, starts at $23,000. It's a hybrid as well, 37 MPG. That's a good package. I've driven that car before. It's actually really, really nice.
That's a great buy.
Yeah. And then, of course, Tesla, the Model 3, the cheapest version there, $43,000, 310 miles of range. Good, sporty enough. Good efficiency, and this is before tax credits, $43,000, so that's a pretty good deal. And finally, the Kia Telluride, 3-row SUV. That's what America wants. Kia's making this. They can't keep enough in stock. Seven-seater there, cheap with good features, good touch and feel, good design. Starting at $36K, it's not a bad car.
I know some people that have the Telluride and they love it.
Yeah,
they swear
really.
by it. Yeah, they do. So I don't know. I've never driven one though.
It's a great car.
It is a great car, all right. And relatively affordable when you're comparing it to some of the competitors out there. All right, let's get to another big story. Apple getting into the lending business with a buy now, pay later service. We've known about that, but the iPhone maker now saying potentially reports out there that they will be laying out some rules about whose transactions will be approved. We have Dan Halley on set to break this down. Dan, what do we need to know? Because it doesn't look like everyone will be approved, at least right now for this.
Yeah, so according to these reports, it basically comes down to what kind of customer you are at Apple, what kind of, if you applied for an Apple card, the types of cards in your Apple wallet, and the types of devices you may or may not have purchased from Apple recently. So this seems to be, this is according to this Bloomberg report, where Apple is going as far as approving these loans. Apparently, most testers have gotten approved for upwards of $1,000, and so you would pay this off obviously in installments. The big deal for Apple being that it's more there's less friction if you're going to be a Apple user, right? You're a regular Apple consumer. There's less of a I have to bounce out of this app and then go into this app to make my purchase. You can just do it all through Apple itself, presumably through an app that they would offer with this buy now, pay later service. And they talked about this at their Worldwide Developers Conference, WWDC, in June, basically laying out how this would work for consumers. Obviously, Apple Pay being a big draw now. That seemed to just explode as far as the numbers of users over the years. It was a slow burn to the point where now a majority of Apple users use Apple Pay. How this buy now, pay later scheme will roll out, though, and how will it be accepted, that kind of remains to be seen. I mean, look, we already kind of do buy now, pay later. We pay for our phones in installments, but that's not necessarily coming through Apple.
I left my wallet at home a week ago. Haven't needed it.
It happens to me all the time.
Hey,
I walked in the store with it. Yeah.
Not one time anywhere. It's
ever
amazing.
get in the car without your wallet and then be like, "Ooh, that was the wrong move. Where's my license?"
Yeah. I drive without it all the time.
You shouldn't be admitting this.
There should be a license in there.
It's a satire.
All right, so we wanted our phones bigger and bigger and bigger. Speaking of Apple, now we want them flipping? Is that really on the way here with Apple?
Yeah, so there's the possibility, right? They were awarded a patent or issued a patent for a display, a touch display with foldable features. That's kind of what the patent laid out here. You can see this is kind of one of the designs there. And, you know, there's been talk of an Apple foldable for some time, whether or not it'll be an iPhone, an iPad, an iPhone that unfolds into an iPad. You know, you can fold things a bunch of different ways. So maybe it'll be a paper airplane. You know, these are different things that Apple could roll out, not the paper airplane, obviously. But it'll be interesting to see what they do. This could help goose sales. The problem is, this was from a UBS analyst note, basically saying that, look, people don't necessarily care about the ability to fold their device. They want better batteries, they want better screens, they want better cameras, they want the basics. So does that mean then that Apple won't go into this area? Who knows? Yes, they have the patent, but they have, you know, patents for everything, right? Yeah. Remember we were talking about Apple TV for a long time, or, you know, I mean, the AR headset, that's supposedly coming later this year, but we don't know for certain. So it's something that now is in their arsenal. You know, I've used foldable devices. Samsung has their Flip 4 and Flip and Fold 4. They're fine, but there's no real defined use for it. I don't need it, right? So that's I think where the question lies.
Yeah, it seems counterintuitive to why we love the iPhone, but we all trust in Tim Cook, don't we? Dan Howley, thank you, sir. Appreciate that. All right, coming up, Twitter's now allowing cannabis advertising on its platform, and Trulieve is taking advantage. CEO Kim Rivers tells us why this is a big opportunity for the industry when we come back. A glimmer of hope for beaten down cannabis stocks today. Shares of Green Thumb Industries and Trulieve, two of the biggest multi-state operators in the country, up more than 11% over the last 5 days. The optimism over a new policy from Elon Musk's Twitter advertising guidelines. For the first time ever, cannabis ads are now live on the social media platform. One company taking advantage is Trulieve, and their CEO, Kim Rivers, joins us now. Kim, always nice to see you. How significant a game changer is this for your company and the industry?
I mean, to have a platform of Twitter size with approximately 400 million people live on the platform, it's an incredible opportunity for the cannabis industry. It's a huge step into normalizing cannabis for the American population, and we're thrilled to be the first company to be advertising live with Twitter as of today.
Yeah, we have one of your ads, and we'll put that up on the screen for everyone. Twitter's policy, though, also reads, advertisers may not promote nor offer the sale of cannabis. So, Kim, are they in effect taking your money while handcuffing you at the same time?
You know, like I said, I think it's a tremendous step forward in normalizing cannabis, which we know, of course, is overwhelmingly supported by the American people, as represented by all of the states that have legal cannabis programs. And so, you know, I would say that certainly we would hope that there will be incremental progress and change to the policy, but we are very thankful and thrilled to have the opportunity. You know, just as a reminder, we are, as cannabis companies, prohibited from advertising on many normal channels. So we cannot advertise through traditional TV, through traditional radio, and other traditional media. So really having access again to the 400 million Twitter users to build brand awareness, to build education around cannabis and the benefits is a great step in the right direction.
So how about other platforms in terms of Meta, TikTok? Is there any progress or discussion there?
So, I mean, we're very hopeful that this will be the first step, and that other social channels will begin reviewing their policies as well. Certainly, our team is poised and ready and would be thrilled to take advantage of any other opportunities that present themselves. You know, Trulieve as a hashtag actually has strong followings on many of those platforms, and again, would love to be able to have a relationship in a more formal fashion.
Yeah, it's really hard being shadow banned. I experienced that myself in posting anything about the industry at all. You mentioned television and radio and even billboards. Is there any discussion on trying to change those guidelines, and how difficult does it make it for your industry?
Yeah, you know, I mean, it's just a patchwork. I mean, we see this and we're proficient, right, at understanding and balancing and operating between kind of, you know, what's legal and what's acceptable, and then what's not, given the fact that, of course, we don't have a uniform federal policy around cannabis in the U.S., although, of course, we're on the forefront of trying to affect change there. Because those traditional channels are regulated through the federal government, that's obviously difficult for them to change those policies and processes without changes, again, at the federal level. That being said, listen, I mean, the American consumer, we all consume media in lots of different ways today, right? It's not just traditional methods. And so I do think there's going to come a time when other channels, such as Twitter, like we're talking about, other social channels, certainly there's availability for streaming services, et cetera, that don't necessarily have those same restrictions. So I think you're going to see the industry continue to evolve and continue to get creative and to meet people where they're at. And you know, I think that unfortunately, if folks don't change policies, they potentially risk getting left behind.
Yeah, this good news comes on the heels of a lot of tough news to start the year. Colorado sales were down 20% last year. Tilray made some massive job cuts. Cannabis prices in Canada have plummeted 40%. Businesses like yours exiting California as far as a market. When you talk about policy, when you talk about our elected officials in D.C., what does the industry need above all else to reverse these trends?
Yeah, I mean, I would say that, I mean, look, cannabis demand is alive and well. We're certainly seeing inflationary pressures just like every other business, and pressure on wallet for consumers. Again, I mean, when, you know, your eggs are more expensive, your gas is more expensive, you know, you have less available income. But what we know is that cannabis consumers are also very loyal, and that they have in many cases replaced other, you know, whether it's spices or other prescription medications for cannabis in their everyday life. So what we need is comprehensive and actual real policy change coming out of DC. Certainly, it would seem that safe banking, which is literally just a policy to say, let's keep cash off the streets and enable our businesses to bank funds and to utilize banking services like in any other normalized business in the U.S., would be a step in the right direction. You know, we're optimistic that President Biden, in kicking off his review of scheduling, could have some real significant and positive impact for the industry as we look at whether or not it makes sense for cannabis to continue to be classified in the same category as heroin and other hardcore illegal substances. So, you know, I think that there is positive change to come, but, you know, listen, we need for Congress to step up, to really take action that is not just lip service when it's election time, but actual real policy and substantive reform.
In the meantime, it's Elon Musk here with some good news for the industry. Trulieve CEO Kim Rivers, good to see you. Thanks so much.
Okay, thank you so much.
All right, coming up, Marvel's new Ant-Man film already feeling heat from critics, but will that stop fans from seeing it in theaters this weekend? Find out next.
You're an interesting man, Scott Lang. You're an Avenger.
Kang the Conqueror is making his big screen debut as Marvel's next big bad villain in Ant-Man the Wasp: Quantumania. It's the first superhero flick in what looks to be an action-packed year at the movie theater this year. Here to walk us through all of this, we want to bring in box office guru, founder and editor Gitesh Pandya. Gitesh, great to see you here. So lots of hype heading into this weekend about this brand new movie. How big of a weekend do you think it's going to be for it?
Oh, well, it's easily going to be the #1 movie in North America and the world. A part of that is because there's no competition. Part of that is because it's the biggest movie franchise out there. This is the Marvel Cinematic Universe. Every film is huge. This movie is a bit underwhelming. I didn't like it as much as some of the other films. And it's the third time around for Ant-Man, so it's hard to have something new. I think some of the fans will be a little disappointed in that part, but it does bring the action up to a larger level. A lot of green screen, a lot of VFX. You can argue maybe there's too much green screen and VFX in this film, but it is a built-in audience there. They'll come out big time. I think it could break 90 million on the opening weekend. It could possibly break 100 million. That's Friday, Saturday, Sunday. And because in the US it's President's Day on Monday, it has a long 4-day weekend. The Ant-Man brand has good family appeal. So that's good business on Saturday, Sunday, and even Monday. So it should definitely break 100 million over 4 days, maybe get to 110, possibly larger than that. Part of the reason is that because of the reviews that are not so great, that might see the grosses subside a little bit. We'll have to see if people come out or even come out a second time to see this movie, which sort of continue this saga.
Yeah, man. Second lowest Marvel review we've ever seen on Rotten Tomatoes. It's got a 50 right now. That certainly can't help. What other superhero movies can we look forward to this year?
Oh, there's a lot. I mean, Hollywood banks on these superhero films. People complain all the time about how there's too many superhero movies, too many comic book movies. But at the end of the year, when you look at the top grossing films, most of the top 10 has these kinds of movies. This is where people spend their money. So you've got coming up after this Ant-Man film, next month you have Shazam! Fury of the Gods. That is the second movie in that series. This is part of the DC universe of films. Again, Shazam is one of the sort of second tier characters, kind of like Ant-Man is in Marvel world, not top tier. Then you go to May the 5th. That's the kickoff of the summer movie season. Marvel is back with the MCU. They've got Guardians of the Galaxy Volume 3, another superhero sequel. They're always teasing the end of a franchise and so on. Maybe this is what's happening here with Guardians of the Galaxy. First two were very popular. They were mixed in with the Avengers movies. Now they're back to a solo film. So certainly big grosses on this one. Then we move into June 2nd on the animated side. Sony Pictures has this one. It's Spider-Man Across the Spider-Verse. Now, if you remember the first one, the animated film, it won an Oscar. It was highly acclaimed. This is the sequel after Into the Spider-Verse. It's now Across the Spider-Verse. Spider-Man is one of the biggest brands globally when it comes to superheroes. This one should be a massive hit in the month of June, I think. Then you go to the middle of June, you've got The Flash. Now, this one had a lot of problems in its production with its lead actor and other issues of delays. Finally, it comes on June 16. This is DC back again. They're putting more of the spotlight onto Batman or multiple Batman. We'll see how the movie turns out. The last Spider-Man film brought the three old Spider-Men together, and that was incredibly popular. This one has some rumors about multiple Batmen from the past coming in. Certainly Michael Keaton is back in this one. We saw the trailer and the Super Bowl commercial. So they're trying to use Batman to sort of help out the Flash, who is not as big of a character. And then you've got on July 28th, towards the second half of summer, the Marvels. We saw Captain Marvel, a massive hit, huge blockbuster a couple years ago. And then Ms. Marvel, which is the Disney Plus series last year. They joined forces in this one, which is essentially Captain Marvel 2, but with more characters in it. And that continues the MCU. So for Marvel, Ant-Man is really the kickoff to a series of films this year.
Certainly is going to be a huge year potentially for that space for all superhero fans. I know they're very excited what the next 10 months hold. But Gitesh, outside of those types of films, what are you most excited about just in terms of what could actually get those who've been a little bit hesitant to return to the box office and return to the theaters?
Well, you know, the new trailer just came out for John Wick Chapter 4. This is a great action series. I like these action, violent kind of films. Keanu Reeves, not the best actor in the world, but he does a really good job here as John Wick. And the movies have been better and better, and they've been grossing more and more from 1 to 2 to 3. And I'm expecting Part 4 to be a solid action movie. It's more global in scale, Japan, Europe, United States. So John Wick is moving around a bit. That one opens on March 24. I think that one's going to be a nice hit at the box office. And then also, you know, if you like horror movies, those have always been perennially successful at the box office in the pandemic, beforehand, even now. And Scream 6 is coming out. This is a movie that is March 10th, just a couple of weeks away. That's a franchise which, if you remember in the 90s, really defined the teen horror slasher genre. It went away. It came back last year with the fifth movie. Now they really quickly greenlit Part 6, which is now coming out and moves all of the terror and the action to New York City and the subway system, which is terrifying to begin with. But this is a horror movie which keeps on going, keeps on being profitable. And I think that this one will certainly be another hit movie, this one for Paramount next month.
Nice to see a lot of originality when it comes to screenplays in Hollywood these days, isn't it? Gitesh Pandya, appreciate that. Thanks so much. It's well known that a human is not always the first one you see when to resume your apply to a new job. Often it's a computerized system that scans your resume for the relevant skills and qualifications. I don't know if everybody knows that. Nearly 1 in 4 organizations use AI to support HR activities, according to the Society for Human Resource Management. Of those, nearly 8 in 10 use AI tools for hiring. Now those organizations are getting hit with some new laws they must comply with. Yahoo Finance's Carrie Hannon has that story. Hi there, Carrie. What are we hearing?
Hey, Dave. Yeah, well, you know, it's been a bit of the Wild West out there in terms of regulations and restrictions on these AI tools that employers use in hiring. I mean, yeah, there's things like, you know, they can game the system for your, you know, trying to get the right keywords, but there's some inherent bias that can be built into these for, you know, race and gender and all kinds of things. So, you know, we haven't seen a lot of regulation out there to date, but in April in New York City, for the first time, there's going to be a law that actually addresses this issue. And so what's going to happen there, it sort of generally looks at how most employers are using these AI tools. And it's going to really put it on the employer to be transparent, to tell people, hey, this is what we're looking for, the qualifications these AI tools are going to be scanning for. These are the characteristics, the job qualifications you need. And if someone feels that it's not going to, they're not able to be judged fairly in the system, they have the right to ask to try a different way. Now that gets a little tricky. The whole thing is rather complicated, and it's going to be pretty messy as we move forward. But so New York City, that's the first one. It was supposed to start in January, but employers are scrambling to figure out what do they need to do to find out and do these audits on their systems to see if there is bias that's happening. And we all can complain about it, but they are going to be the ones that will be responsible if there are lawsuits on discrimination.
Certainly some changes coming there. Carrie, what are we hearing just about the rise in AI-aided video interviews? There's a little bit more talk about that. What can you tell us there, and just some potential shortfalls you would also think we'll see?
Exactly. I'm so glad you asked that. Now, this is something that the EEOC, the U.S. Equal Employment Opportunity Commission, put out some things, some guidance on this, particularly for people with disabilities, because, oh my gosh, this has become the rage now, that you're interviewed by sort of a chat bot on this automated, you don't even have a person. There's no sort of, it's really a bizarre experience. But what it does is people are judged on their speech patterns, the words they use, their facial muscles, all kinds of things that the AI can, the tool can judge you on. Now, if you have a disability, say, for example, speech impediment, that can really come up to really haunt you in these sort of interviews, and you can be discarded because they use the rhythm of your speech, the cadence, to determine if you can make good decisions. Now, so that is something that, opens up a whole other can of worms, and I think we're going to see a lot more moving forward in that area as well.
All right, great stuff. Carrie Hannon, thanks so much. Well, coming up, at DoorDash shares popping here. You can see it up nearly 6% in extended trading following its fourth quarter results. We're going to break down those numbers when we come back. Shares of DoorDash here trading higher, up just about 5.5% after the company posted results that were actually pretty impressive here, at least to the street. Revenue up 40% on a year-over-year basis to $1.82 billion. Orders also rising 27% from a year ago to 467 million. Let's talk about it, what this means here for the company going forward. And for that, we want to bring in our guest here. We have Nikhil Devnani, Bernstein U.S. Emerging Internet Research Analyst. Nikhil, it's great to have you here. So first, just your reaction to these results. We also got a new president, new COO, and a new CFO. So 2 new changes in the executive suite as well.
Yeah, absolutely. And first off, thanks for having me on. I think the initial reaction is that overall results were pretty solid. What you see is that this business continues to hum along and grow at a pretty steady pace. You mentioned it there with the order growth. That top line is growing north of 20% on an organic basis, which is not something a lot of people would have expected when you kind of rewind several months and everyone had fears around what the post-COVID world would do to this category of consumer spending. And turns out consumers continued to really like the service. They added more customers. They added more DashPass subscribers. So I think increasingly food delivery is becoming more and more of a habit for the average American. And I think the other factor here too, what everyone wants to see in this market is really profit margins expand. And they gave us the hope of that as well with their 2023 outlook, pointing to growth in adjusted EBITDA, likely a little bit ahead of where the street was coming out. And so that was really nice to see as well.
Another example of the consumer just continuing to spend through everything we've seen. So Nikhil, you say humming along. How are they doing so in comparison to their biggest competition, which is Uber Eats? And do they have a competitive advantage in that regard?
Yeah, I think what we're seeing is that, DoorDash and Uber are both growing at a pretty steady and consistent pace. Depending on who you trust, either one might be gaining a little bit of share here or there. But by and large, both of them are growing at a pretty healthy clip in this kind of mid-teens to 20% type of range. And I think what we're seeing is that these are the two scaled players in the market. The entity that's losing out more is Grubhub, which tends to be kind of the share donor in the space to both of these platforms. And I would argue, DoorDash is probably the best position in the US because it does have that scale advantage already. It has the best selection. It has the highest penetration of subscribers who just love and use the platform so much more frequently than everybody else. And that continues to pay dividends, and you can see it in the results here.
And they moved into Europe with the Wolt acquisition. Many are very concerned about the potential for drivers to get these raises in New York, where there are an estimated 90 million deliveries every year. How big a problem could that be for Q1, Q2 down the road if, in fact, that goes into effect?
Yeah, I think it's likely to go into effect, and it's going to probably happen in the second quarter. So, the rule is being reviewed as we speak, and we'll likely get something in the next couple of weeks here. It's going to change the nature of food delivery in the city. It's going to make it more expensive to order. It's just what happens when you kind of raise the pay thresholds for drivers. But I think what we're likely to see is that these platforms will do what they can to operate it away. What I mean by that is you try and batch as many orders as you can together. And I think whatever they can operate away, you'll see it be passed through to the consumer. And I guess the consumer has to get ready to foot the bill a little bit more on some of these services. And maybe some consumers will take issue with that, and you'll see a little bit of churn as a result of it. But I think for these platforms, what they've realized is that it's too expensive to eat all of the cost burden themselves. This is a very difficult business to run. And I think on the margin, when things like this happen, you have to just lean into the price and elasticity that you have and pass it on and take take it there. And maybe it hurts growth a little bit. But I think the stickiness of this service is what these companies will bank on.
Yeah, the Uber CEO was not overly concerned with that on their most recent earnings call. Nikhil Devnani, really appreciate that. Thanks so much.
Absolutely. Thank you for having me.
All right, let's check in with Shauna. What's moving after hours, my friend?
Got 3 stocks for you here. We have Applied Materials, DraftKings, and Redfin. Getting right to it, Applied Materials. That stock up just about 1% here in extended trading. Pretty solid results from the company. Their adjusted EPS beat the street's expectations. Revenue growth of 7% on a year-over-year basis was also better than what the street was looking for. Guidance for its second quarter, it's the current quarter right now, was also better than the street had anticipated. So some bright spots here in the chip sector, in the chip industry, which we have, of course, been closely tracking. So far, year to date, you're looking at gains of just about 18%. Flipping it over to DraftKings, look at that, a jump up about 7% here in extended trading. Pretty solid numbers here from the company. Revenue coming in $855 million. That was a beat. Monthly unique players coming in at 2.6 million, topping the street's expectations of 2.5 million. Also, that's an increase of 31% from just a year ago during the quarter. So a huge jump that we are seeing in monthly unique players. They also boosted their full year revenue forecast slightly, adding to some of that optimism. Year to date, we're looking at gains of about 56%. I think some of the commentary, some of the focus on this earnings call is going to be anything that Jason Robbins, the CEO there, says about the current quarter. Super Bowl, we know we're expecting to be a huge win here for DraftKings. Rounding it out with Redfin, that stock now off about 2% here. Revenue did come in better than expected, $479.7 million. Also, their guidance here, revenue guidance for the current quarter, for the first quarter, was also a beat. Some concern, though, about wider than expected losses. That's why we're seeing shares trade to the downside, off just about 2%. Year to date, clearly the stock has been on a tear, up just about 112%, but certainly some questions about the housing market could potentially weigh on Redfin here going forward, Dave.
All right, good stuff, Shauna. Thank you. Coming up, more workers are feeling burned out, according to a new survey. Find out who the data says is experiencing it the most. Might surprise you. Next. Worker burnout. Are you burned out? Well, levels have reached a new high. According to one recent survey, the Future Forum, polling more than 10,000 workers around the world, and 42% of them say they're feeling mentally and physically exhausted due to stress at work. According to the Future Forum, though, women are experiencing burnout far more than men, 46% compared to 37%. And nearly half of workers under the age of 30 are experiencing burnout as well, 48% compared to 40% for those over 30. So I want your analysis here, my friend. Why are women and young people feeling more burned out than men and older workers.
So women, so two things. I don't really know. I was surprised to see that those under the age of 30 were more burnt out than those over the age of 30. That took me a little bit by surprise. Women, I think from personal experience, you have a lot going on. If you have kids, you feel like you're constantly running around on this circle of life. I think a lot of that probably plays in to their day-to-day work, me personally speaking, and I do think you do become a little overwhelmed. I don't know if that is the case for women out there, certainly not probably as common of a case for those under 30, given the number of women that have kids under the age of 30. But I think that probably has something to do with it.
I think you nailed it with women, because the women I know who are working are burned down, in particular because the guy at home is not holding up his end of the bargain, and most of us are not. Or some are just naturally born multitaskers that want to take on those things.
Is that
but
you?
Nonetheless, they do feel burned out. Now I'm going to play old guy here because that's my resident role on the younger workers. I just think they came into this workforce with different expectations. Some came into the workforce during COVID when they were allowed to be at home and in their PJs. And sorry, they didn't have a chance to develop that grit and grind mentality that a lot of older workers did. Well, I won't say you, but like us, because you're younger.
No, but I'm older. I was in workforce far before COVID, years and years and years before.
Try to make clear that you're not old.
But flexibility also key, and that's something that clearly that was shown in this survey as well. All right, that does it for us today. Yahoo Finance Live. We'll see you right back here again tomorrow at 3 p.m. Eastern Time. Have a wonderful night. We'll see you tomorrow.